Hello, my name's Cameron Kusher, and I'm the Director of Economic Research at PropTrack. And I'm here today to give you a Western Australian housing and economic update as we head into the spring selling season. I'm going to start off with the economic overview and have a look at how things are tracking. And to be honest, economic growth at the moment is really weak. Over the past year, the economy has only grown by 1%. If we look at the long-term average over the last 30 years, the economy's grown by 3%. In fact, the 1% growth over the past year is the weakest growth outside of the pandemic since the end of 1991. And a lot of the growth is being driven by the strong rate of population growth along with government spending. So on a per capita basis, the economy shrunk by 1.5% over the past year, and it's fallen for 6 consecutive quarters, something we've never seen before. Inflation's been the biggest economic headache over the last couple of years, and it's still a problem. So at the end of June, headline inflation was 3.8% and underlying inflation was 3.9%. Inflation is meant to be between 2 and 3%, and explicitly it's meant to be 2.5% these days. That's what the Reserve Bank is meant to target. Inflation has come down from its recent highs, but it is still too high. We will probably see headline inflation fall back into the target range over the next few quarters, but this is mainly due to government subsidies and rebates, which are temporary in nature, which means, yes, inflation will come down, but when they're removed, they'll also be inflationary. So the Reserve Bank's focusing on the underlying measure of inflation, which they don't expect to come back into the target range until late next year or early in 2026. Because inflation's been so high, interest rates have increased. And at 4.35%, they're the highest they've been in 12 years. And they've been on hold now at that level since November of last year. The RBA governor recently said she doesn't expect that the interest rates will come down until next year. And based on current pricing, the next cut in interest rates is expected to be in February of next year. I think that's pretty reasonable. And then there'll be several interest rate cuts throughout the remainder of the year. WA's economy is really strong in terms of the labour market. The unemployment rate at the moment is 3.9%, and you can see the 30-year average rate is 5.4%. That 3.9% unemployment rate is lower than the 4.2% we've got nationally. And you can see that job creation is also really strong, 3.1% growth over the last year compared to a 30-year average of 2.4%. So the labour market is very strong, albeit the unemployment rate has drifted higher and job creation has slowed over the last couple of years. In terms of mortgage lending, it's very strong in Western Australia at the moment. Subsequent buyer lending's up 31.4% over the past year. Nationally, it's up about 14%. First home buyer lending's up about 17%. Nationally, it's up about 11%. And investor lending has gone through the roof. It's up 94.5% over the past year, whereas nationally, it's up 30%. So we are seeing a lot of demand for housing in WA at the moment. In terms of delivering new housing, though, this continues to be a challenge. The cost of building and the cost of the materials that go into new housing have increased a lot. So since the beginning of the pandemic, inputs, which are the materials, are up 34%. The good news is that rate of growth has really slowed. It's up only 1.1% over the past year. The output cost, which is actually constructing a house, has increased by 4.3% over the past year. And you can see it's started to tick a little bit higher, and it is up 41.5% since the beginning of the pandemic. Then you've got the output costs for other residential, which is medium and higher density. We're seeing an escalation in that annual rate of growth, albeit it's only up 25% since the beginning of the pandemic. But all of these increases push up the cost of new housing and create a bigger premium for new homes over existing homes and make existing homes and major renovations less attractive. And as a result of that, that also impacts on new housing being built. And we can see from the commencements data, there has been a big fall away in commencements in Western Australia and right across the country over the last few years. We are starting to see a little bit of a pickup in approvals, but they're still well below recent highs. And then the number of dwellings under construction is still extremely high, and that's because everything is taking longer to build. Western Australia has seen a booming population over the past year, and it's a function of both very strong net overseas migration, which has been at record high levels, but also very strong net interstate migration, with fewer people leaving Western Australia and more people migrating to Western Australia. And of course, this all drives more demand for housing. Overseas migrants a bit more on the rental side, but interstate migration both on the rental side and demand to purchase properties. Let's now look at what's happening in the established housing market. Over the past 3 months, prices in Perth are up 3.3%. You can see that that rate of growth has decelerated, and there's been a greater deceleration in regional Western Australia, where prices are only up 0.6% over the last 3 months. And in 3 of the 4 regional markets in the red there, you can see prices were lower. Over the last year, though, the growth has been phenomenal. Prices in Perth are up 23.2%. Now, it does look like they may have peaked, but that's still well above the other major capital cities. So as a comparison, Sydney prices are up 6%, Melbourne prices are down 1.5%, Brisbane prices are up 14%, and Adelaide prices are up 15%. And even in regional WA, we're seeing very strong price growth of almost 15%, with prices in Bunbury up more than 20%. Of course, this does come after about 15 years of very sluggish price growth in the lead up to the pandemic. One of the main reasons for the strong price growth is the lack of stock available for sale and the lack of stock coming to market. Now, encouragingly, there were slightly more new listings in August this year than there was last year, and it's now above the average that we've seen over the 5 years between 2018 and 2022 in August. So again, early days, but if that continues and more stock is obviously very favourable for buyers, and as real estate agents, we want more listings. The total number of properties on the market, though, is still extremely low. It's down about 20% from where it was a year ago, and it's 46% below that 5-year average level. So when someone starts looking for a property, there's not much to choose from, and there hasn't been a lot coming to the market. So this really drives this fear of missing out and a bit of desperation from buyers, because people feel like, if I miss out on this property, I don't know when the next good one's going to come onto the market. And the market might have moved another 15, 20% by the time the next good property comes on available for sale. So even with the low volume of stock, we're still seeing quite strong sales volumes, although they are slightly lower than they were last year. They're down 4.8% from a year ago. But you can see we've seen fairly consistent sales volumes over the last couple of years in Perth. It's very mixed, though, depending on the region you're in. So you can see the inner suburbs in the southwest have seen increases, whereas there's been falls elsewhere. And then regionally, the wheat belt and the outback south have seen an increase in sales compared to last year, while they're marginally lower elsewhere. We're still seeing very strong levels of inquiry per listing, which is our measure of demand. It's up 29% from a year ago in Perth. It's up 72% from a year ago in regional Western Australia. And you can see across all of the state, the number of inquiries per listing is higher than it was at the same time a year ago, which really points out that there's a lot of people that want to buy, but the problem at the moment is actually being able to buy, because there's not enough stock available for sale and there's not much stock coming to the market. Now, if we go back 12 months ago, properties were sitting on the market typically for 12 days. That has increased over the last month. It is up to 28 days. It'll be interesting to see if that actually starts to fall again over the next couple of months. But certainly, compared to other parts of the country, properties are selling very quickly in WA at the moment. And a bit of a different story when we get into the regional areas of Western Australia. You can see that obviously properties take longer to sell. But somewhere like Bunbury, we've seen a very big increase in days on market compared to a year ago. Perth's inner suburbs have also seen a very large increase over the last 12 months. So what's our outlook for the established housing market? Firstly, if we look over recent years, there's been several big drivers of price growth, and it's all had to do with the fact that it's increased borrowing capacities. So interest rates have fallen from 18% at the start of the 90s to 2% during the pandemic. That increased borrowing capacities. Credit availability was loosened a lot right up until the global financial crisis. It has been tightened again. So credit is not as freely available as it used to be. And credit availability did drive demand for mortgages. And employment participation has reached record high levels, mostly due to more women joining the workforce. And that has pushed up household incomes. So with those three drivers unlikely to be as strong going forward, I don't think we can expect property prices to rise like they have in the past. Now, this isn't to say prices won't rise, but I think the expectation needs to be that prices are not going to double every 7 years like everyone used to talk about. And it's more like probably 12 to 15 years for prices to double. In saying all of that, though, we are seeing very strong demand for housing right now, especially when you consider where interest rates are and how quickly they got to that level. And even the fact that we are starting to see a bit of an increase in the volume of stock for sale. That volume of stock, though, is still extremely low. But if we do start to see that rise, it will probably lead to a further slowdown in the rate of price growth in the WA market. And if we do get more supply as well, that fear of missing out that people currently have will start to fade. Buyers will have more choice, they can be more discerning, and vendors will have to reset their expectations. That high cost of new housing we talked about is likely to continue to see people preference existing homes and properties that don't need a renovation. In saying that, the persistently low volume of stock will drive more people to new homes if they just feel like they can't find what they need. We need more density in inner city areas, but there's a lot of political and financial hurdles to doing that. And I think that the high cost of renting is going to drive more people that have the capacity to do so to become first home buyers. And we'll talk more about that when we look at the rental market right now. So over the last 3 months, we've seen house rents in Perth increase by 3.1%. Unit rents overall were unchanged. And you can see on the right there how that plays out across the different parts of the market. Your typical rent in Perth is now $650 a week. Out of all of the capital cities, Sydney at $720 a week is the only one that's now more expensive than Perth. And you can see some really strong rental growth, although surprisingly, probably not the areas that you would think you're seeing the strongest rental growth, like the inner markets. They're lagging a bit behind, whereas it's the outer areas where rents are more affordable that's seeing the strongest growth. And this speaks to people being pushed to further away areas to rent because they simply can't afford in those more desirable markets. We've seen rental yields increase quite significantly. They are starting to ease because price growth is now stronger than rental growth, but rental returns are still very attractive across a lot of parts of the market in Western Australia at the moment. And encouragingly, we're starting to see a little bit more stock come onto the market. So new rental listings were up 16% from a year ago. They're still below that 5-year average, but this is giving renters more choice. It also means for people wanting to sell a property that need to transition through the rental market, there's a bit more availability and a bit more comfort that if you sell your house, you'll have somewhere to live while you're trying to buy your next one. We can also see this playing out in the total rental listings, which are up 27.5% from a year ago. Now, they're still very low on a historic basis, but again, an encouraging development if you're a renter or if you're looking to sell. A less encouraging development if you're a landlord and you're trying to recoup all that increase in your interest charges with higher interest rates. In terms of rental inquiries per listing, now they're still very high on a historic basis. You know, before the pandemic, we were looking at about 12 inquiries per listing. It's now 32, but it has come down a long way over the last 12 months in Perth. It's actually higher than it was 12 months ago in regional areas, although that's very mixed. You can see a lot of that's being driven by the wheat belt and the outback north, whereas Bunbury and the outback south have seen a decline in inquiries per listing. Rental vacancy rates are still very low. They have increased a little bit from their recent lows, but still representing a very tight rental market. And properties generally lease pretty quickly. Property is typically staying on our market, on our site advertised for 21 days. It was 20 days a year ago. The 5-year average in August to 2022 was 26 days. So still very tight conditions, albeit things have eased off a little bit, and there's some signs that there's more stock becoming available for rent. So what's our rental market outlook? There's several factors that have driven the increase in rents and demand. A reduction in household size through the pandemic, low levels of new housing construction as housing prices have gone up and as interest rates have increased. And other factors there are labour shortages, high costs, high material costs, and financing costs with interest rates so high. And then when we opened the borders again, we had very strong population growth, mostly from migration, but also fewer people leaving Western Australia than we used to see. We've continued to see rents rise over the past year. There has been a slight slowdown in that annual rate of rental growth, but supply is still very low on a historic basis. Investment has definitely picked up, and that will help make the market more competitive. The capacity to afford the rent, though, is an increasing challenge. And the way people respond is move to a less ideal location, a smaller property, or probably unwillingly, but out of necessity, move into a share house or take in a housemate, because you simply, the cost of rent's gone up much more than the cost of living, and people just can't afford it anymore. How do we address what's happening with the rental market? On the supply side, you get more housing. So you build more, which is very challenging at the moment, or you get more people investing in residential property, which we're certainly seeing in the WA market at the moment. On the demand side, you can lower the rates of migration, which the federal government is trying to do with caps on student visas. You can increase rental assistance, which they've done for 2 years after no one did it for about 20 years. So that's good, but more needs to be done there because it's people on lower incomes that are most at risk of falling into homelessness. The other thing you can do is try and help people become first home buyers, which again, trying to do, but given how much rents have gone up and how much the cost of everything has gone up, it's very difficult for a first home buyer to save a big enough deposit to make that transition. But I think the expectation that rents are going to rise further, and particularly in WA, that prices are still rising, we'll see more investors coming into the market. And I think it's going to encourage people that have the capacity that are currently renting to exit the market and purchase, especially as interest rates fall and borrowing capacities start to increase. So that's the end of today's webinar. Thank you very much for your time. I hope it was useful for you and your business, and good luck for the rest of the year. Thanks very much.